Good morning, traders. It is Monday, October the 14th. Taking a look at the chart, we got the SP 500 daily chart here, and you can see price action, big, strong close to the week on Friday there, with the markets having a big rally. More or less, we are still trading in this kind of narrowing range in price action, and we're getting up into this resistance area. If you look at the futures chart, it opened up, closed at about the midway session for the day. And today we're seeing equities trade down about a third of a percent. Overall, they're holding their ground. And the big question is, are we going to get some follow through buying? It was a huge wave of buying on Friday. We saw the NYSE buying ratio about 5 to 1. And when the ratio is that strong, it usually means we've put in a top. But you got to keep in mind, we do get those type of ratios when the market has some significant type of breakout in the market and it's changing trends. So we could be into that. You can see overall, there's not a whole lot of upside potential. We're going to have this resistance trend line. Really, it's also this previous pivot high in price. So there's not a whole lot of upside in price. And if we look at the SPY, you can see what happened during regular trading hours. This candle, uh, very bearish candle. So price gapped higher, ran up, and then got sold back down into the close with some pretty heavy volume. And of course, that gave us this big gap window in price. So we have this price gap, and we know gaps tend to get filled. So overall, I feel as though we could be entering into this type of price action right here, where the market gaps higher and maybe trades for a day or two, but it has to come down and fill more or less most of this gap that it had. And so we could see the market fade down today, fill some of this gap, which would be equivalent to it fading down over in here. We have this candle high right over here. So it doesn't have to fade all the way down to fill more or less the previous session's gap. But if we see the price fade back down and fill there, we could start to see the market momentum shift to the upside, and we get something like this where it pops and we see an extended move to the upside, to the upper end of this range. Again, we're going to have this trend line coming down over here, so it could find some resistance around this 3000 or this previous pivot high right over here. But going forward, the market is trying to change trend to the upside, and bonds are on the verge of actually flipping to a downtrend. Now, they had a big sell-off last week. We ended up scaling out, getting out at the open. We took some gains, got out at the open, continued to free fall. Today we're getting into an oversold bounce, and we'll see how things unfold. Overall, I feel as though we're going to be into something like this or something like this here, where all it's sold off. It's going to have a couple days bounce, and then we could see it have another leg down and test these lows over here as a support zone. So overall, we are back in cash. We're looking for some setups, and again, the markets are all squeezing into some pretty tight patterns, and we're waiting for some really clean breakouts to get back into some positions. Now, if we take a look over at gold, gold and miners, let's zoom out a little bit here. Again, the big picture still very bullish on gold. Gold, if we actually just go to let's go to the weekly chart of gold, zoom way back here, you can see we are more or less out of this resistance high right through this area here. We've broken out of this basing formation, the stage one accumulation. It had a pause, a rally, a pause, a rally, a pause. Still very bullish, and it'll be primed and ready for another continuation, a strong pop, potentially up to the 1700, and that'll bring us into all of this noise over here that we saw in 2011, 2012. And a bit of 2013. So overall, the pattern is still really nice. But if we zoom in to the daily chart, let's just zoom back in. We're still in this downtrend. Things are flagging out, and we have a sell-off, a pause with a little bit of a hook, and then a sell-off, a pause, and it's looking like it's trying to roll over here and could continue to go down. Overall, it has made that nice three-wave correction that we like. We like an A, B, C wave correction. It's this C wave down that breaks this previous pivot low. That's what usually cleanses the market, and it means you've put in a lower low, lower high, and that is the definition of a downtrend. And it flushes the market out, people get out, and now we're looking forward to try and put in some type of base, some formation here for us to potentially get long for the next leg to the upside. But we don't know how far gold could go. It could go into a multi-wave deeper correction down into this area over here. So we're just letting it do its thing. It's not about trying to buy gold at the bottom. and hold forever. We're trying to get in, catch these plays, and again, we've caught these moves, very short moves. We catch the short moves, use some leveraged ETFs, and we are have double the performance of GDX in terms of our gold plays and miners plays this year, and we're only in the market a fraction of the time. We play the quick move, and then we let the market do its thing. It might go a bit higher, but overall it fluctuates in these areas where we catch the quick move and we let it do its thing before we get long again. And that's what we're looking for. Some type of setup for us to get back in for the next leg higher. Taking a look over at silver, 0.25% up to today. Again, it's got this three-wave correction, this ABC, and we're letting it do its thing. We're trying to see if it's going to start to build a base and start to go higher, or if it's going to roll over and really flush the market out and catch people off guard. And the miners, same type of thing. They got some pretty bearish price action, huge selling volume last week, and they really just kind of rallied up into resistance with a bear flag, and they're starting this move down. We'll see what kind of move price action we get this week, but again, they're still trending lower, and they're probably trying to carve out some bottom here. For all we know, they could be putting in a little bit of a you could argue here we got maybe some type of a triple bottom. It could hold its ground and start to build a base and start to break through here to the upside. But it could very easily flush out and cleanse the market and continue to go lower. So we're not looking to short something that's more or less in a bull market. In a longer term uptrend, we're looking to play the move up, get out when things are overdone, and let it do its thing for a bit, and then get in again for the next leg higher. Now, if we actually take a look, let's take a look at the weekly chart of gold miners. This is the same for GDX, GDXJ, silver miners, silver itself. If we zoom back here in time and look at the price action, you can see here, we just draw a line across here. There's a couple levels across here. We just draw a line across here. This to me is the major stage one accumulation kind of phase. This is the bottom of the base, and a break above here is the next major bull market for gold miners. And they haven't broken out yet. Gold has broken these previous highs. Gold is seen as the global safe haven, and it's actually leading the way in terms of it is in a bull market. Gold miners are still within this major basing formation, and it hasn't really broken out of here. And when it breaks this 51 or whatever price that is, that's when we could really see a huge explosive move. So we're still in the early stages for gold miners and juniors and even silver. They're not in a full-out bull market yet. And you can see here they've got a nice pullback. Might have a little bit more choppiness here, but overall the pattern is still very strong. And here's a rally up, the pullback. The second half of that move should bring us right up into that 50 area. And then whatever it does here, eventually when it breaks, we could start to see some pretty strong momentum to the upside going forward. Taking a look over at natural gas, it's having a nice pop today. Let me go back to the daily chart. Natural gas having a nice oversold pop. Again, I've talked about this many times, but just kind of keep recapping. Overall, when the market gets oversold, you get a short covering squeeze, and then it comes down and usually flushes the market out. It tries to build some type of a base, and we get a base in here, and this is what we did. We traded here, we caught the move, we got out. The market continued to go higher, but had a blow off top, and now it's sold off. We had that short covering rally. It's faded back down to new lows. It's starting to find a bid again today, up almost 4% or 3.5%. Overall, we're looking for some type of basing formation and for us to potentially get back long for a natural gas rally. We've been just patiently waiting here, and we're hoping for some type of setup that gives us a nice opportunity to get in, and it feels like it's carving out a bottom. So overall, if it starts to trade sideways, build some reversal pattern, we will be looking to get long natural gas for potentially a quick break in a run higher. Looking at crude oil, down 2.33%. We talked about this last week, how it had a series of bear flags, a sell-off, bear flag, sell-off, bear flag. It is at this longer-term support zone in the market right across here, where it is tagged a few times, and more or less it popped and squeezed up into resistance, into this blue resistance line going way back in time. We got a ton of moving averages in here, all kind of clustered, and just a real mess. I'm not a huge fan of the crude oil chart, but overall it did get into a little bit of an overbought into resistance area. Today we're seeing sellers step back in and we could start to see this come back down and test this level. And if this lower level is broken, then we are headed down to this 44. We'll be heading down somewhere right into this area here, into this 45 and potentially down into this 42.50 area. That could be the next downside move for crude. In the bigger picture, that would be this pattern here. This would be the larger bear flag, and you've got the second half of that leg to the downside, more or less this distance. You take that distance there from the top, then you measure it down, it gives you the downside target. So that's kind of where we're seeing crude potentially go. It's got this critical support line in the sand. If that breaks, things could get ugly, but at this point, it is still trading above there, and it could hold its ground for a little while yet. Anyways, that is it for this morning, and I'll talk to you in a little bit. Bye-bye.